Over the years, service has been the key engine of growth for Nigeria. And if the key engine of growth in an economy does not employ much, for growth to actually translate into wider prosperity, it has to come from a sector that employs the largest percentage of the population.
That's true.
If our growth comes from the industry, then it's more likely to be more inclusive compared when it comes to the side from the service sector. I understand the concern that Nigeria is growing, but how much of that, right, translate into prosperity?
Given Nigeria's current oil capacity production, do you think 2 million barrels per day is achievable?
The assumption usually made, they will not assume the worst. The question is whether historically we have been hitting that target. That would present, a downside risk to the forecast, meaning that the growth they project may not actually, happen the way they expect it to happen.
After 2 years of aggressive reforms, Nigeria is finally moving into the consolidation phase. But for most of us, this headline do not really matter. Is this forecast really translating into change for the everyday Nigerian? Welcome to Macro Matters Africa on the CSEA Podcast, a segment that focuses on key macroeconomic issues and trends in Africa. Today, we'll be discussing Nigeria's 2026 economic outlook, while focusing on 4 key macroeconomic variables: GDP, inflation rate, exchange rate, and public debt. I am Favour Chidebere, and joining me today is Dr. Jamilu, a postdoctorate research fellow at CSEA. Welcome, Doctor. It's a pleasure having you on this podcast.
Thank you for having me.
You're welcome. According to the IMF, Nigeria has been identified among the top 10 global contributors to GDP. But for we, the average Nigerians, we see that this growth in GDP is not translating to job creation, is not translating to standard of living, or even poverty reduction. In fact, the World Bank says that Nigeria has experienced some sort of macroeconomic stabilization, but is not reflecting in the standard of living. Why is this so, that we're experiencing growth in GDP, but it's not translating to improvement in standard of living?
This is a serious question. First of all, if you look at the GDP projections and also the actual, GDP performance last year, which was about 3.9%, the current projection for 2026 is about 4.4% by the IMF, forecast. CBN is about also 4 point something. NESD also provided its own forecast. When it comes to your central question, how does the growth in economic activity proxied by the GDP, translate into welfare to average Nigerian? It's a serious question and should be of concern to every Nigerian. For us to discuss that, we need to understand the sources of growth itself. Where does the growth comes from? That is important because over the years, service has been the key engine of growth for Nigeria. And if the key engine of growth in an economy does not employ much, it's about the level now of participation. So, for growth to actually translate into wider prosperity, it has to come from a sector that employs the largest percentage of the population.
That's true.
So, in our own case, service appears to be the key driver, especially banks and the rest. These areas, they need a skill level. In most cases, they don't employ much. So as they are generating the income, the growth for the economy, only few people, will get to carry large share, while the widest majority, engaging in agriculture and other sectors will have, a smaller portion. It's just like a pie, So who contributes the largest share of the pie to the pie takes the largest portion. So in most cases, Nigeria, agriculture employs the largest, percentage of the population, but it's not contributing much to the growth we are seeing, even from the projection aspect of it. The forecast also expect service to drive growth in 2026.
Exactly.
So we should be expecting, to see, the inclusiveness of the growth may not improve well much because the question lies in the inclusiveness of the growth. Nigeria is part of the fastest growing at the rest. But how inclusive, right, is the growth? How you and I can benefit from it. If we do not participate in the growth process, let me put it this way. We get our own relative contribution to the growth, right? So a lot of Nigerians, some even in the informal sector, are not contributing that much. So poverty will continue to be high. Job creation is still not, improving, simply because, as I said earlier, the engine of growth, the driver of the growth, is not actually coming from those sectors that can actually employ, like the manufacturing sector, the industry, for example. If our growth comes from the industry, then it's more likely to be more inclusive compared when it comes to from the service sector. You get the idea?
Yeah, I do.
So I understand the concern that, Nigeria is growing, but how much of that, right, translate into prosperity? Again, growth also in terms of Nigeria is impressive, given the challenges, the reforms, that Nigeria has undergone in recent years. Although some people will argue that part of the growth we are seeing is the replacement effect. That one also matters a lot.
Yeah, that's a valid argument.
Yes, because some people are arguing that this is statistically fixed. So the growth may be just a number, not in actual economic activity, because you have changed the base year to 2019. So that also, will have implication.
Thank you so much for that insight that you shared. But still on the GDP, around November last year, the GDP was about 3.98%. And then in the forecast for 2026, CBN says that GDP is expected to rise by 4.49%. And this forecast is based on certain assumptions. One is higher crude oil production of about 2 million barrels per day. And also reforms in key sectors like manufacturing, mining, transport, real estate, and the service sector. Do you think this forecast is obtainable? Do you think it's feasible for Nigeria, the 4.49% GDP growth rate, given Nigeria's oil production capacity as of now, and then the state of these key sectors in Nigeria?
Yeah, this is an optimistic forecast because the last year's GDP growth, the estimated one was about 3.89 or let's say 3.9%. So for CBN to provide a forecast of 4.4%, that means they are very optimistic about the economy. However, this is a baseline scenario. In that baseline, so many things can happen. So what it implies is that if the conditions and the assumptions made by the bank holds in 2026, that growth is, we may likely see something like it, given the margin of errors. However, if on the other hand, that is on the contrary, those assumptions failed, something happened, that distort the assumption, it may not hold. But still, I do expect, growth to be higher than this year.
But given Nigeria's current oil capacity production, do you think 2 million barrels per day is achievable?
No, the assumption usually made, they will not assume the worst. No, they will not assume the worst. So the question is whether historically we have been hitting that target. If historical evidence suggests otherwise, then that it will present, a downside risk to the forecast, meaning that the growth they project may not actually, happen the way they expect it to happen. Because of that, not only the oil production, even the assumption about the other sectors, is they are being optimistic about the economy, and the actual outcome usually, if you look at most of the forecast, the actual outcome usually is less than the forecast in recent years. So I am not expecting their forecast, the growth, to be 4.4, but I'm expecting it to be more than last year's own, the growth. Yeah. But I can't see it being 4.4 or going beyond that, because I know some of the assumptions might not hold or might break along the way, or something can happen that, distorts the macroeconomic condition, and then, yeah.
So let's move on to inflation. Inflation is expected to drop to 12.94% in 2026. And because of this optimistic forecast, the MPC meeting of February 2026 cut NPR by 50 basis points to 26.5%. But something interesting happened. At the end of 2025, we would notice that Nigerian farmers experienced a loss of post-harvest losses of about 5 trillion naira. And then we're expecting election to happen. And with election, there'll be more spending. So do you think 12.94% forecast for inflation is actually obtainable, given all these factors?
I should be happy that, cost of living is coming down as the CBN expects. You see, farmers all over Nigerians are not happy, including myself. Yeah, and friends, But the truth be told, in their podcast, they have mentioned that the driver of that decline in inflation, or let's say this inflation episode, the expected inflation episode, is actually food price. They expect some productivity, and then the PMS, the fall in PMS price. But, coming back to your question about farmers and the massive, post-harvest losses that we have seen in Nigeria, some may not go back to farm next year, in the next farming season. And if that happens, the productivity shock, the positive productivity shock that the bank is expecting to, contribute to this disinflation may not be there, because that will imply shortages in the market in the future. In economic, language, we will say that I am expecting the supply cap for the agricultural product to shift to the left as more people, or more farmers got scared to invest in farming again, unless something else. All these things we are seeing are a result of policy. So unless maybe another policy comes to keep them, boost their spirit and kickstart their optimism again. But I am not expecting inflation for 2026 to actually be that 12.something%.
But
I'm
will it
expecting
actually
higher.
drop?
It may, but I don't think so. I don't think so, because
You don't think it will drop as low as 12%?
I don't think so. It may drop, but not to that extent. It may even go higher. Because we are also expecting election spending, as you mentioned. And again, if farmers refuse to farm as they did last year, what do you expect? Food price might also go up, which constitute about 40% of the consumption basket. So even in the consumption of the CPI, food has the largest portion. So if food price is, a bit increased, we will not see that decline coming. Moreover, even though the core component of the CPI is still very sticky, so I do not expect inflation to come down to that level.
That's a very powerful insight you have there. Dr. Jamilu. Let's look at exchange rates. So since the start of this year, Naira has been appreciating in the foreign markets. And I think about at the start of this week, February 23rd, 2025, it dropped to about 1,300 Naira per US dollar, according to the Punch. And this is due to FX liquidity, more dollar that is being pushed out into the parallel markets. And we've also seen the gap between Nigeria's official rates and exchange rate in the parallel markets to be very slim. But in the light of election spending, which is also going to be in dollars, and in the light of current economic realities, do you foresee this appreciation of the Naira to be sustainable?
Yeah. You see, exchange rate is one of the interesting variables in economics. It's interesting because of its nature in terms of predictability. It's very difficult to predict the direction that the exchange rate is going because so many factors determine its behavior. First, the forex market itself reacts to news. Any news, good. Then there are other sources of forex besides export. Capital flow. Capital is something that Nigeria tries to attract, but we don't have control over. You get it. Oil price also determines our exchange rate movement, which is not determined by Nigeria. It's determined by the international, market. So a lot of those things put together, it makes it difficult to see with exact, argument that this is the direction that the exchange rate is going to take. Yeah, you may see appreciation within 1 or 2 weeks. Then later you will see depreciation. Then you start to wonder what happened.
It can be very volatile.
It is very, very volatile. It responds to so many things at the same time. And, Nigeria is claiming that it's willing buyer, willing seller, meaning that the forces of demand and supply determines the direction of the market. Yeah, election spend is going to have, an impact, appreciation impact. If we look at it from the angle of, people bringing out, their dollar, and pushing it. But on the other hand, capital outflow also affects the behavior of the exchange rate. Some investors, if they foresee the election becoming wild, they may try to get out of the country. And the first point of contact is the forex market. They want to translate their naira into, foreign currency and they move out of the country. So a lot of things will happen this year and next year to the forex market. So we should be expecting to see some wild behavior, but we are still optimistic about the market being Nigerians,
I'm really excited about the year 2026 with
Yeah.
the forecast and everything in the FX markets, inflation rates, GDP. I mean, it's going to be a fantastic year for everybody.
Yeah.
But before we go forward, let's take a step back to 2025. Let's look at the forecast for 2025 and then the outcomes that were achieved. So last year, forecast for GDP was around about 4%, but at the end of November 2025, GDP was around 3.98%.
Yeah.
So we are not able to achieve last year's forecast for GDP. The same thing for inflation rates and the same thing for interest rates. Now, is there any lesson that we can draw out from last year's experience with the forecast
You
to
see,
implement in this year?
when it comes to forecast, there are always margin of errors, negative and plus attached to it. A forecast of 4% now being realized at 3.89%. I think is a good, outcome.
So it's still a good outcome.
It's still a good outcome.
Okay.
Yeah. Because the margin of the gap is not that much. You get it. It's not that much, especially when it comes to growth. Some countries are growing at 1%, 2%. Although it's not about, it's about what that percentage can do to the economy. Advanced countries may grow at 1%, 2%, but that 1%, the impact cannot be compared to, let's say, 6% growth in developing countries such as ours. So for me, if the forecast and the actual outcome, the difference is not that much. I think it's a good thing, okay? But still, in model building, in providing forecasts, there are always those, upside and downside risks. And there are things that you don't even expect to happen to the economy. Some shocks can come and then they destabilize everything. That is why sometimes you tend to see revisions. For example, IMF revised Nigeria's, forecast of the debt to GDP ratio following revision. But earlier on, they already provided a forecast. But something happened. They changed it. They revised it to reflect the most current reality on ground. Meaning assumptions do change. So forecast is not always, going to be the exact thing. But it should be able to be close to that. If it is a positive one, yeah, but if the forecast, is negative, I foresee negative growth. So, the whole essence of the forecast is to give you a direction. This is the likely direction that the economy is going to take, given A, B, C. So, if the direction that the economy is expected to take is not actually, what you expect, it's not good for the economy, what happens? Policy. That is why sometimes you see the forecast is different from the actual outcome. If you foresee recession coming, what should you do as a policy maker, as an economic manager? Institute some policies and actions, right, to ensure that expected recession does not happen. So in that case, you see that the forecast and the actual outcome is what? They are different. Maybe from negative growth to a positive one because of what? Policy action. The same thing with that of 4%. If the target of, let's say, fiscal authority for growth that year, let's say, is 5%. Despite the fact that you have provided a forecast of what? 4%, but they have a higher target. If they work towards, achieving that, you may see disparity. You may see divergence in terms of what? The actual and the forecast. But what the model tell you, or the forecaster tells you, is that based on my model, based on my assumption and the rest, this is what I expect the Nigerian economy to be. That does not mean that Nigeria should stick to that forecast, because we do have our own objective as a country. The central bank has, its own inflation target. Even if the central bank expects inflation, let's say, for example, to be 12%, it can be aggressive when that does not tallies with its own objective. Let's say the single-digit objective. The situation has been single-digit inflation. So they may still be aggressive. Although, of recent they have, reduced the rate, but they may be aggressive if that is what they consider above, target. So actually, there is a lot of, things to consider when discussing forecasts. The forecaster is different from the economic manager. Sometimes the economic manager is, himself provide the forecast, but he's not saying this is the actual economic, performance. This is what I expect the economy to be. So are these my expectations actually consistent with my objective? If they are, you work towards actualizing that particular forecast. But if there is a divergence, right, all you need to do is to make sure that you have reached your own target objective.
Thank you so much, Dr. Jamili. Your insights have been really exceptional and they've been data-driven. Now we know that insights are not the real thing. They just show us, the direction of where the economy is headed in that particular year.
Yeah.
And we've also seen that policies can shape forecasts.
Yeah.
So if we have a forecast of 12% and then this is our policy objective and we start making reforms towards that objective, those policies can either make that forecast obtainable or not. So thank you so much, Dr. Jamili. It's been an absolute pleasure having you on this podcast.
Thank you also, Pepper, for having me in this your wonderful podcast.
You're most welcome. Today's conversation has been really enlightening. We focus on Nigeria's economic outlook for 2026, while focusing on 4 key macroeconomic variables: GDP, inflation rates, exchange rates, and debt. The insights shared in this podcast will be very valuable for the everyday Nigerian to strategize for the year ahead with precision. Don't forget to like, subscribe, and share. Thank you for watching, and see you in our next podcast.